Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That guy over there is Fat Man Zoom. The stock market is crazy and chaotic, and we made it our mission to help you own it. And Fat Man Zoom, it is a stock watch Father's Day Sunday.
Yes, glad you asked. Starting 5 is Jeff Chow, Alan 316, Sam Cisneros, J6, and Lickett John.
I hate it when you do that.
Yeah, happy Father's Day, everybody. We got a special guest. Say hello to Mini Zoom. Mini Zoom? Say hello to people. She just is going to stand there and make that face. She may say some words. We'll see what happens.
It's not awkward or anything.
So this is going to be a little bit more PG rated today because Mini Zoom's hanging out with us.
Yes.
But anyways, yeah, Father's Day editions. Shout out to all the fathers out there. We got a few things we got to talk about. I don't know. Are you excited about this week? Do you think it's going to be a crazy week, or do you think it's going to be more of a low key week?
I think it's probably going to be a week in which we see the same kind of volatility we saw really all last week, but then it would potentially turn around at the end of the week as we're starting to ramp up for the next earnings season starting next week.
Yeah. So for you guys who haven't been to Own the Chaos, specifically to Stock Watch Sunday, this is sort of our flagship programming on Sunday night. We talk about what's going on in the market.
We're going to do this. Oh. There she Happy Father's Day, everybody. Happy Father's Day.
But we got our 5 stocks that we're watching this week, unlike our 5 stocks that we're watching. And can we cut to commercial break?
Yes.
And we're going to talk about a few things going on in the market. Maybe talk a little bit about a big day that Ethereum is having this week. And then a couple questions if we can get to those. But this is Own the Chaos, and it is our mission to own it.
Yeah, so the Fed, so let's just talk about what happened really last week. So we talked about this. If you guys are part of the Chaos Crew, a part of our watch list, we talked about on Monday last week about how we would potentially experience some volatility because of the Fed going on. We actually touched on this last Stock Watch Sunday, as well as the quad witching that happened. And then the Dow ended up having its worst day on Friday since October. What didn't, though, were tech stocks that actually continued to go up and did really well. And a lot of this had to do with the fact that the Fed had talked about potentially tapering and then also raising rates in 2023 when they kind of backtracked a little bit because they had said that originally they were going to do it in 2024. So they moved the timeline up, and everybody kind of lost their mind a little bit. And we said this could potentially happen.
Yeah.
But I don't think that this changes anything. The economy is roaring, and really when the rates get raised, stocks, equities, they continue to go up. That usually means that it's a good sign. It's a good sign the economy is doing really well when rates go up.
Yeah.
And so obviously we saw a lot of the tech, the FANG stocks went crazy. And I think that we could see that carry over a little bit into next week. We're already seeing that. The futures right now, NASDAQ is up while S&P and Dow is down right now. Nothing crazy, but it looks as if the trend could continue at least for the next couple of days. And then we might be able to see a turn. But man, Fat Man Zoom, I think there's nothing that's keeping me away from the reopening plays right now. There's nothing that's keeping me away from oil, industrials, that sort of thing. Even though we've seen some of that pull back, I think it's just a good opportunity, especially in the short term, to see these go back up again. We're coming up on the summer months. Demand is absolutely insane, especially for travel and vacations and all that good stuff. So there's nothing that's keeping me away from any of that.
Yeah, we've talked about this. We've talked about opportunity, and this is part of the strategy, is like looking for opportunities in the market, healthy companies, healthy stocks, and looking for pull back and looking for them on discount. And so what the name of the game is just finding those opportunities, which I think we have some, specifically in the 5 we have tonight for our top stocks or stocks that we're watching this week. But nonetheless, there's always opportunities, and they're created by situations like this.
Yeah.
It's our job through our due diligence to decide, all right, are these material or non-material in their impact to the stock? And I think we both agree that the situation with the Fed raising rates or at least moving up the timeline is a non-material issue.
Yeah, and I just wanted to read something that came out from the Fed, because the Fed seems to think, or not the Fed, from Barron's talking about the Fed. Barron's had put out basically that the stock market isn't buying what the Fed's putting down. They're saying that, being that the Fed is saying that, inflation is transitory, it's continuing to, and they're just going to take it slow. It seemed hawkish, even though he was still toughish at the same time. I don't think anything he said was really all that hawkish, but they said, according to Barron's, that when an economy is running a debt to GDP ratio at 100%, more growth is debt driven, and it's very hard to raise rates. And so it's almost as if they're not even buying that rates are going to get raised in 2023. And this could mean that tech continues to roll and do really well. Is this going to be another great rotation, like we saw the rotation into cyclicals and that sort of thing, or is it going to go right back to what it was? And I still think that that's probably going to be the latter, at least in the short term. Should we be not owning tech stocks right now? No, and we've talked about this. I mean, Amazon's at a crucial resistance point right now, and I thought for sure we were going to see it blast up above that on Friday, but we'll see what happens this week. But I mean, man, I think that this is almost kind of like a fake out for tech. And it's not to say that you shouldn't own it, but I don't think it's going to potentially outperform some of the cyclicals again this year. Maybe leading into next year as rate talk may continue, but I think that the cyclicals, the industrials, and that sort of thing could still outperform, especially oil. Mm-hmm. But tech's still going to hang in there as well.
So. Well, first off, what does hawk mean? I don't know what that means.
so hawkish and dovish. So like if the Fed's gonna basically this whole through 2020 up until now, dovish
dove means dive, hawkish means soar.
Sort of like you're gonna if you want to compare it to interest rates, I think that's probably a good way to put it.
Okay.
So if he's dovish on the market, it's basically meaning that he's not going to be raising rates, not talking about tapering or anything like that.
Okay, gotcha.
Hawkish is kind of the other way around.
Okay. Got it. Okay, cool. I mean, I think the catchy phrase I'm starting to hear analysts use is the counter rotation.
Yeah.
And so whether that happens or not remains to be seen. At the end of the day, it goes back to diversification, have a well-balanced portfolio, and not necessarily trying to guess, but, looking at what you think is going to be bullish and then looking at your time horizon and those that maybe aren't going to potentially move as well, still getting good opportunity entries in it, because you also don't want to miss the boat on that. We'll see. I mean, you talk about a stock like Apple, which is maybe it's a little bit different, but if you look at Apple, it had a great run last year, but it actually is largely not performed very well and lagged.
Right.
So is that an opportunity now, or is it going to continue? Will it not perform throughout the rest of the year? And we talked about Amazon, which is it has made a nice move, but for the most part, it's stayed in this channel for 9 months?
Yeah.
So when it does bust out, man, it's going to be a massive move, but it may take some time.
It could be close. We could be getting close. Maybe the next earnings will be that catalyst that pushes it up. But one thing that we've always heard is to not fight the Fed.
Yeah.
And it seems as if the stock market's trying to fight the Fed, and it doesn't make any sense to me. So I'm just going to continue to go along with what the Fed says, and so instead of trying to guess what they're going to say, and just roll with the punches that way. But like you said, just having a good balanced portfolio is going to be the way to go for sure.
Cool, man. So what's the next topic of discussion you have?
That's kind of really it. I mean, there wasn't a whole lot that went on last week. We saw some movement in some of the meme stocks, but really nothing crazy. I mean, obviously nothing like we saw the week before, but
when did the quad witching happen this past
Happened on
week?
Friday, yeah. And so that's what I guess spooked a lot of people along with the Fed talks on Friday. And so we can continue to see some volatility, like I said, over the next couple of days, but it should either level out or start turning around by the end of the week, I would assume.
I got one topic that I want to bring to the table. So It's June 25th, I believe. Ethereum. I want to talk about Ethereum?
Yes.
Because this week is the expiry of options calls on Ethereum. So it's a key date people have been looking at. I don't want to say necessarily it's Friday, the 25th. And so I just wanted to get your thoughts. Overall, crypto has been down.
Yeah.
Including Ethereum, Bitcoin. But then there's this D-Day of sorts on Friday. What are your thoughts on crypto at these levels, and more importantly, Ethereum and the impact of Friday?
I mean, it seems to me, like looking at the chart, that Ethereum has kind of, in a sense, bottomed out. One of two things are going to happen. It's going to continue to go up from here, or the latter, if to what you're speaking about, what happens on the 25th, causes a sell-off. There could be a pretty extreme dive down, maybe perhaps down to the 1865 area, or even as low as 1500, like we saw when things kind of crashed after Doge took a shit. All that stuff happened around the Saturday Night Live issues and stuff like that. We saw crazy flash crash. So I think that there's definitely possibility that it could actually hold the support, but there's definitely a catalyst looming to what you were speaking about that could cause this to go lower and break that support, and it might get ugly if that happens.
Yeah, so it's $1.5 billion worth of options expiration on that day. This happened in the end of March, which caused nearly a 20% drop off over for that following week, and so we could see something similar to that.
Yeah.
Now, it came back stronger, and after that following week, then it proceeded to go up over 50% in the next month.
Yeah.
So could be a really good buying opportunity, guys. Like, it went down to like 1,500 and then moved back to 2,500. We might see this thing under 2K, and if so, and even maybe close to that 1,500 mark, and if so, man, it's going to be hard not to scoop up more.
The 200
more Ethereum.
Yeah, the 200-day moving average is at around 1890 right now. Mm-hmm. So if it falls below that, it could get a little dicey. I mean, we saw it with Bitcoin. It actually did fall below the 200-day moving average and has struggled to get back up over it ever since. So it really is a interesting, I guess, indicator. Just following that 200-day moving average, it's wild to see how bullish it gets once it busts up over that. But once it's still below it, it really struggles to get back up over it. Mm-hmm. So I think that the same thing can be said for Ethereum. So Ethereum has remained above the 200-day moving average all year. So if this is what causes it to fall below that, it could get ugly.
Yeah, so keep an eye on that, June 25th, this Friday. Now, you ready for our top 5 stocks?
Let's do it. So, go ahead.
Yeah, no, you got it.
So, every Sunday, we always go over the top 5 stocks that we're watching this week. Sometimes they have earnings, sometimes they don't. This case, at least for me, they do. And my first one this week, Fat Man Zoom, is going to be KB Homes. So KBH is a ticker symbol. They have earnings on a Wednesday after hours. Their estimated earnings per share is $1.31. And if it's one thing that we've seen from the home builders, Fat Man Zoom, is that they have been on absolute fire in an industry, in an industry as far as real estate is concerned, where supply is an issue. The home builders are raking it in. And we saw Lennar knock out their earnings last week. They knocked them out of the park. Upgrades everywhere. D.R. Horton continues to rock and roll. And we've actually seen KBH pull back a little bit, which in my opinion could present itself with a decent opportunity. If Lennar is any indication of what we could see from KBH, then I think that it should do rather well on earnings. And if you look at the chart here too, it looks pretty good. It looks like a pretty good setup. If this holds up over that $40 mark that you guys see I have marked here, this is my support line that I have marked here at, 41, we'll call it, 41.33, thereabouts. And it started to make this move. And if you look at Lennar last week after their earnings, you can kind of see how this really made a nice, decent move after this consolidation. So I'm hoping that we see the same thing from KBH. And all signs are pointing to that it's probably likely that it does. So if you're feeling a little bit lucky, and you want to take a chance on this before earnings, I think that you do have a pretty good probability of making some money on these earnings. But of course, we always like to stress that there is a risk involved here. But I think that the probability for upside is pretty high here still.
Yeah, and we have new home sales this week. What day did you say?
Thursday, I believe.
Okay. So we have existing homes, I think, on Tuesday, and then Thursday, I think, is new homes. If I'm not
Yes, I
mistaken.
believe so, yeah.
Yeah, so that should be interesting, but we still very bullish, especially new home builders. So that's a good one.
Yeah.
Number 2, I have Nike. So Nike's one I've talked about on the channel. It's a watch list recurring stock. Well, I don't want to say recurring. We've had it multiple times, but we recently kind of brought it back into the fold. Just technically, it's been lagging a little bit, but they have earnings this Thursday after hours. Earnings per share estimates 51 cents, which I think is going to be an easy beat. I have it coming in at 61 cents. I expect increased guidance. I think the narrative is really going to be sustained e-commerce growth from COVID, which they had massive growth, and renewed foot traffic. So you combine those two, and it should paint a really bullish picture moving forward. That's what I'm looking at for Nike. And we always talk about best in class, a company like Nike, who's just really continuing to distance themselves against their competitors, considering how far, like how old the company is. You look at Under Armour. Under Armour is probably the one company that took a shot at Nike, and they just couldn't cut it. And so they decided to shift and move away. So feel really good about this earnings. And if you look at it technically, I think there's a really good opportunity here, Brad. I looked up sort of the price target estimates.
Yeah.
So Nike's sitting at around $128 a share. The average price target is 167, I believe. Yeah, 167. The high end of that is 190. The low end is 140. So the low end is still above where it currently sits.
Yeah.
167 implies a 30% upside. 190 implies almost a 50% upside. So you could see the sentiment as far as analysts are concerned, and us on our channel. I feel like we're also bullish on this company, and I think we see really good conversation coming out of Thursday's earnings.
Not just this company, but the retail industry in and of itself. I mean, we talk about the amount of spending that's been going on from consumers. I mean, the record amount of savings rates for Americans, and they got money to spend. And we saw that with a lot of the retailers that already put out earnings over this past quarter. Nike shouldn't be any different. The only reason that Nike came down, Fat Man Zoom, was last quarter they had issues with their European ports. It's still revolving around COVID and a lot of that sort of thing. And that's also lightening up. I imagine that we see a really good outlook from Nike as well. And, you know, we could really easily see a turnaround. Now, the chart has been downtrending pretty much ever since last quarter earnings. And where could you end up buying this? I think there's certainly a support here at this 126 area where it touched at on Friday. And so if this continues to come down, and we've talked about this before, when you see a stock run up into earnings, it's usually more along the lines of a situation where it's buy the rumor, sell the news.
Yeah.
And you kind of feel the opposite way as it starts to sell off going into earnings. If people are worried about earnings not being good, if they're kind of on the edge of their seat trying to figure out what they're going to come up with, they usually end up taking the safer side and selling. And I think that's probably a mistake for Nike as well. Yeah. The chart looks good though for potential asymmetrical trade, as you would put it.
Yes, sir.
My next one is going to be a Daniel Camarena special. And it's FedEx. FedEx has earnings on Thursday after hours. Their estimated earnings per share are $4.94. Fat Man Zoom, I have them coming in at $5.26, which would be a monster quarter. But if it's one thing that we're learning, it's that the supply-demand issues are continuing to be an issue. And FedEx and pretty much UPS are more or less a duopoly. Wouldn't you agree? I mean, there's other ones, sure, but those two are pretty much running the show. So they've continued to raise prices for shipping and all that good stuff. And it hasn't slowed down. Like shipping for e-commerce especially, and we've talked about how once consumers form habits on e-commerce, it wasn't going away, and that's what we're seeing right now. So I think FedEx actually comes in and does has a really good earnings, and I think that their outlook supports that as well. You look at the chart here. I'll bring you guys back. and actually have a pretty decent trend. It just broke this trend. I imagine these earnings are going to bring it right back into that ascending channel, Fat Man Zoom.
Yeah, I think so. I mean, we're going to talk about e-commerce sales in my next stock, in the next stock, and I think this is the new way of doing business, and e-commerce only adds fuel to fire on this thing, so definitely a good call on that one.
Yeah.
Next stock. So I looked at 3 stocks, all e-commerce strength related, and it was Amazon, Target, and Walmart.
Yeah.
It should have been Amazon, but we already had it on the watch list. Stock Watch Sunday. So I felt like I was going to pick between the two, and I decided on Walmart. So Walmart's my 4th stock, not earnings, but there is an event, which is Prime Day, and Prime Day kicks off tonight at midnight Pacific time. And Target and Walmart, like they did last year, they're doing like an event coinciding, which is similar, which is like a free whatever day, focused on e-commerce, free shipping day. And the reason why I chose Walmart was because you look at Walmart's kind of lagged. When you look at Target, Target had a great year last year. Not that Walmart didn't, but Target really outperformed Walmart, and they came through COVID. They've made really good moves. I really think you could pick any one of the 3, but my feelings on Walmart is I don't think the story is done being written, and I like kind of the moves they're making. You look at Amazon, and their projections, the projections for 2021 say that Amazon should account for about 40+% of e-commerce sales, which is huge. Yeah. Walmart comes in at 7%, and Target comes in at 2%. So you can make the argument that Target could have increased market share, just has opportunity for increasing the market share. It's harder for Amazon to keep the lead, and if they go from 41 and increase 2%, they're at 43, big whoop, whoop-de-freaking-do. Yeah. Right? Yeah. If Target goes up 2%, it doubles 2 to 4%. So I think you look at somebody like Walmart who already has 7%, and if they just get to 10% market share, beat those projections, which is very possible, I think that's huge for the company. So I think they make a comeback this year. I'm excited to see what they do. They're actually running a sale through Wednesday, their free shipping sale. But one of the things I was excited about was last week they announced that they were formally moving forward with an investment in Drone Up, which focuses on last mile delivery. And I guess they tried it last year. And so it's the first time I heard of this, but they tried out the drone delivery, which shows a focus on e-commerce. And I didn't know this, and I want to read the statistic correctly, but 4,700 stores Walmart has. They're within 10 miles. These stores are within 10 miles of 90% of the U.S. population. And that's maybe their one competitive advantage against a company like Amazon, because they're trying to find warehouses, and that's fine. But Walmart already has existing stores. They already have the infrastructure in place. And so to be within 10 miles of 90% of the U.S. population seems like a huge advantage to increase that market share.
That's pretty nuts. And, and we talked about e-commerce and how we feel that that's the future. That's where things are going to go. There's still plenty of room for growth as far as that's concerned. But there's something to be said for, I need it right now. I need it right here, right now. And if all I got to do is run out and come back real quick, that's where Walmart definitely has the advantage. I also wanted to know one other thing from you, get your opinion. The drone deliveries. Yeah. I feel like there's a huge risk factor with this. I mean, what's keeping people from trying to, bring these drones down to steal packages or whatever? And how are they going to track those? And maybe I'm just oblivious, but that seems like it's a huge risk in my opinion. Or there's bad weather and it knocks them out or whatever.
Yeah. I mean, I think there's risks associated with everything. You talk about urban centers, there's risks surrounding people just stealing your packages. Yeah. Right? So that's an issue. I think that is certainly a concern, but I think it's such an obvious concern, there's probably a way that they've dealt with it. Also, I would imagine when you factor in the cost savings of not having delivery people, even if you do have that sunk cost of stolen packages or damaged drones or whatever, you probably still make out net positive because you're saving on the vehicle costs, the labor costs, because drones aren't like when you compare them as a cost to like a delivery van, it's a
Right.
much cheaper cost. So
Right.
labor is usually the biggest cost that these companies have, and now you're cutting out that labor. That's pretty big.
Yeah, I mean, I guess, driver's insurance, all that good stuff
Yeah,
as well.
I mean, from a cost
it all adds
benefit
up.
perspective, I'm probably like,
Makes sense.
well, we'll take the risk. And that's the one thing Walmart's always been good at is cost efficiencies.
Yeah.
So they've had great margins and great systems, and so I think that, I'm sure that's one of the main concerns, but I'm sure they'll address that.
Yeah, I mean, I'm sure they will too. It's just that was my initial knee-jerk thought was like, it just seems like it would be really easy to steal packages out of the sky like that. And maybe it's not because I don't know, altitude maybe is a little bit higher than people that I might realize or what have you, but.
Yeah.
The chart, and you're right. I mean, you look at it and you compare it to a Costco or a Target, and it is lagging, most of the big box stores. This to me is definitely a good opportunity. If it holds above 135, I think we're in good shape. Also 129, if it doesn't, could be the next stop for it, would be another good opportunity, but there's no reason to not be bullish on Walmart either, in my opinion. So like this one a lot. For me, my next one's going to be Darden restaurants. And so this one, if you guys have been following along, we've talked about Wingstop. We've talked about Bloomin' Brands. We've talked about Dave & Buster's. All of them have blown earnings out of the water. And Darden has not yet moved on that type of news. And so I think that this could be a really big catalyst for them. We talk about people going back out to eat. Darden, if you guys aren't familiar with them, they have an array of restaurant groups, restaurant chains, but the most notable ones are Longhorn Steakhouse and Olive Garden. And so I think that the more that people are going out, the more that Darden, it looks attractive, and it's pulled back to a reasonable level to where I think it would be worth grabbing and owning before earnings. Now, again, huge risk going into earnings, but the upside here, I think, is probably going to play into your favor. Estimated earnings per share at $1.77. I have them coming in at $2.23, and I think, honestly, that's probably conservative.
Yeah. Hospitality has struggled primarily with just employment and staffing issues.
Yeah.
However, I think that probably favors these corporate outfits. So a company like Darden, because the mom and pop who can't offer as many benefits as their competitors and as like the institutional ones,
right.
I shouldn't say institutional ones, but the corporate ones, as competition increases for staffing, companies like Darden should benefit. So maybe that factors into it. I think there's some short-term headwinds that they face, but everybody kind of knows that already. So any sort of optimistic picture that's painted should benefit hospitality. And people are only going to increase going out. So we'll see what happens. I think, though, that a company like Darden, based on, not that I go to Olive Garden or Longhorn Steakhouse, but I think when you look at the model, it sets itself up really well with the current climate that we're in.
Yeah, I mean, and we've kind of gone with this theme with Nike and some of the retail sales, and then with KBH and how Lennar reacted to earnings. And I think that this is something that we could see very similar. All of the other hospitality earnings have just been blowouts, and I don't know why anybody hasn't really caught on to this. And you look at Darden, and this is now pulled back with the rest of the market from last week, and I think that a pretty decent support here lies at around 126.5. If it comes back and retests that before earnings, I think that's a really good opportunity for Darden. If you're willing to take a chance on something before earnings, this could be one to watch for sure.
Well, there you guys have it. Those are our top 5 stocks that we're watching. We're watching, people. We're just watching. This week, we'll be going live Monday through Thursday. We're going to have earnings reactions after hours for those earnings. So make sure you tune in 3:30 p.m. Eastern time. More importantly, we have a watch list similar to that where it's 5 stocks that we're watching that we release every day, and it's free. So go into the description. It's onlychaos.com. Click on the link, and you too can get those 5 stocks.
And we crushed it last week, just saying. Amazon killed it.
Yeah, it did kill it. I got a couple questions. Now, some people are throwing them in the chat. I think they're important questions. One is something we didn't talk about that I think it's important for us to acknowledge, but the NVDA stock split.
Yes.
So the record date is tomorrow, June 21st. The stock split date, where the shares will be traded on the adjusted basis, isn't until July 20th.
Yes.
So on market open July 20th. Do you expect any reaction this week to
No.
it?
The reaction is going to be
July 20th.
Yeah.
Yeah. Do you think it'll be largely sideways, or do you think it could still run? Because it's been on an incredible run. I don't know if you can pull up the chart.
Yeah, it has been on an incredible run, and there's been price targets raised. What was it? What did we see last week? To 850,
yeah.
I want to say.
Yeah.
So, I mean, this seems, and look, NVIDIA is one of our favorite stocks. It's in Fat Man Zoom's name, for crying out loud. But this seems a little ridiculous at this point. Now, it has pulled back a little bit. We look at the chart from 775, and then it closed the day at 745 on Friday. I'm not going to sit here and say NVIDIA is overvalued, but I think this has gone up too quickly.
Okay.
And we could see a repeat of a Tesla split or an Apple split from last August, in that once this goes through, what's motivating people to buy NVIDIA again? And I know that we have potential mergers and that sort of thing coming up, but, this to me seems like it's extremely overheated, and I think that I would probably avoid NVIDIA, at least from buying it right now, until it sees it at least cool off, maybe around to 650 or so.
Yeah, I would agree. I would enjoy the ride if I'm already in it.
Yes, yeah, for sure.
And really be clear on your exit strategy. But we've seen this run up before. We saw it with Tesla and with Apple, and we saw what happens after the fact. And so I would be excited if I didn't own NVIDIA. And I personally do plan on looking for an entry after the stock split. Obviously, you got to wait a month. But I think there's going to be a great opportunity because, for one, it has been on such a run. It's running hot. But two, it's kind of bucked the trend of the other tech, and it probably will continue to do that, which I think means that we're in for an even bigger pullback on this stock. So being ready for that entry, doing all the fundamentals we talked about, like I'll be scaling in, I'll be looking for a rip-off REITA opportunity and dollar cost averaging. So I do think there's going to be a really, really great opportunity, certainly below 700.
Yeah, if this is happening to NVIDIA, can you imagine what would happen if Amazon finally announces one?
Oh, my God.
I would be very, very tempted to just whole account that shit. I really would. I really would be tempted to.
A lot of people talking about PENN, so I want to talk a little bit about PENN. But first, I want to ask you, because I think PENN might be included. I think I just want to ask you this every Sunday. And it doesn't have to change. If it's the same, it's the same. Okay. What are your top 3 highest conviction stocks right now?
It's going to be Airbnb and Spirit Air Systems. And man, I think it probably has to be PENN still.
Okay.
Even though it's come down.
Yeah, I mean, I think the sentiment is echoed within the community, because as I'm reading these comments, I think people feel really confident where they're adding to it, their dollar cost averaging.
Yeah.
And it's cool to see, because I know, I personally have friends that have invested in PENN, and it was really off the excitement off the S&P 500 entry.
Yep, which is where it was at its highs.
Yes, and it's now cut
50%.
50%.
Yeah.
Yeah. So it's tough, but as you break those psychological supports, like getting below 80, getting below 75, how low can it go?
Yeah.
The reality is, if patience and discipline, we've always talked about 2 fundamental factors in success. I think if you exercise those 2 here, you're going to be just fine. And I do also have high conviction on PENN.
I do too. I mean, the reason it's been selling off, it's been reacting to the rest of the market. It did break its trend from the last time it was down at the 73 area. It went all the way up to around 83, 84, I want to say, and then ended up breaking that ascending trend. So now that it's fallen back down, it may have to retest that 73. And I actually told the folks in our Chaos crew, again, if you want to be part of that, make sure you go to ownthechaos.com. But I did mention to them, I was like, listen, if it breaks this trend, it could get ugly. And we look at it on the chart, and it is. So if it retests this bottom support at $73, which it looks like it did on Friday, and holds there, I'll feel a lot more optimistic in the short term. But there's not one part of me that wants to sell this whatsoever. And I'm actually looking forward to what this might look like by the end of the year, especially with football season coming, and they had some really good numbers with even the Indy 500, which is interesting. And then you have NBA playoffs, you have golf, which the US Open was today. And so there is some things going on, baseball obviously too, but football is where they make most of their money. And I think that this is going to be something that is going to be closely watched, and we could see a pretty decent turnaround maybe by the beginning or the end of the summer.
Yeah, absolutely. I would put PENN in my top 3. That'd be tough. It'd definitely be top 5.
Yeah.
Long term, for sure. Yeah, I'd say that. PENN has to be. Mine would be similar in that it would be PENN, Airbnb. Was that in order? Airbnb, Spirit, and
There's I don't have really an order.
So like, I think just because of PENN and Airbnb are 1A, 1B to me.
Yeah.
Just because of all the states reopening for PENN, I think once numbers start coming in, honestly, once football gets back in the season, I think it'll be surprising if it doesn't run. So just sort of like sitting patient, looking for those opportunities to kind of add to it, and then move forward with it. But I would say Clover still has to be on my top 3 high convictions. I toy between Clover and Drive Shack. I think Drive Shack would also be top 5. But man, there's some stocks that I still think look really poised that have been doing well. Zoom's have been doing really well. Palantir's been doing really well.
Yep.
But I also think, we talked about sort of a resurgence in FANG, and just like looking back in FANG, don't discount the big boys. Don't discount the heavy hitters that have largely treated us well. And I'm just thinking about this because we had Scott on when we had Scott and Freddie on a Thursday on our live stream, and he said, "I have $10,000. How would I invest it?" And you just talked about growth over time with Apple. It's just consistent growth, and there's no indication that that's ever going to change.
Right.
And so, even stuff like Apple, and the other FANGs, I think, should do really, really well.
I mean, Apple's had down years, but still averages 28 to 40% every year on average. So it's just wild, man. I think one other question I did want to ask you was about the airlines. Have you seen this craziness with American Airlines?
No.
Yeah, so they've had to cancel hundreds of flights over the weekend. And a lot of it has to do with the fact that they can't staff pilots. They can't staff anybody. And it's been a real issue for them. So they've had to cancel flights. And we saw that Southwest Airlines had issues last week as well. They had technical issues with bookings and that sort of thing. We've talked about how travel demand is at crazy highs, and so it seems to me that perhaps there's some issues, or at least a bottleneck as far as that's concerned with airlines. I don't know. I mean, I think that, in my opinion, and I'll get yours in a second, but I think that we've talked about this, about how American Airlines was probably the worst airline company to own out of the big ones, and we still love Southwest Airlines. Even with Southwest Airlines having technical issues, they were able to get right back online, no problem, and they canceled a minimal amount of flights, not hundreds, over a 72-hour period.
Yeah, we're most bullish on Southwest, and Delta's right up there. Delta I hold in my long-term swing trading account. So, yeah, I mean, I agree with you. Go ahead.
Okay. So, yeah, I mean, as far as the airlines are concerned, I think we probably still maintain our conviction on Southwest, and he's still with us. Yeah, so I like Southwest. Southwest is our favorite one. There's a lot of reasons to love it, and no pun intended, because ticker symbol is LEV. But Southwest still going to be the one to own, and this is kind of one of the reasons why we didn't like American Airlines. They spend too much. Their debt is crazy, and now they can't even find employees to work for them. So it's a big problem.
Yeah, and don't sleep on Save either. I'm dying, guys. I'm dying. I thought I was back, but I'm not. Something's happening here.
It's all good. I got you, brother. So, yeah, Save is Spirit Airlines, not to be confused with Spirit Air Systems. But, yeah, another one that has really good balance sheet. Relatively speaking, none of the airlines have good balance sheets. But relatively speaking, this one looks pretty good, too.
Speaking of sports gambling, I feel like I'm back.
I think you're good.
You watch basketball at all?
Yeah.
Thanks, Stuart.
Last night's game? Whew.
Crazy.
Yeah.
Nets, Bucks?
Yeah.
Kevin Durant, man, he's a machine.
48 points and still get it done. It's crazy.
I know. But that overtime shot, the shot he made in regulation to send it to overtime, that was like this much off the three. That would have been a game winner if he would have been behind the three-point line.
Yeah.
Which is crazy. How much do you think the teams in the finals, and specifically, I mean, in the playoffs as a whole, but really the finals, because that's where a ton of the money's wagered.
Yeah.
How much do you think that affects companies like PENN or Barstool Bets or like DraftKings, companies like that?
I think it's huge. I think it's a big deal. I mean, especially when we talked about March Madness, and that was like one of the biggest events for them, of the year, next to the Super Bowl. So, I mean, I don't think it's as necessarily as big as those two, but it's still something that I think probably between that, golf, and baseball carries them into the next NFL season.
No, I'm not talking about NBA. I'm talking about how much do you think the teams that are playing in the finals, right? Like if you have the Lakers versus the Knicks,
I see.
2 big-ass markets,
yeah,
as opposed to the Bucks might be in the finals.
The Clippers,
which is an LA market, which is a big market, but not bigger, maybe not bigger than the Lakers as far as like
or
gambling.
Golden State for that matter. I would say Golden State's probably a bigger draw than the Clippers probably would be.
Maybe, but who's left are really smaller market teams. The Phoenix Suns are left. It legitimately could be, the Suns versus the Bucks.
Yeah.
Which are great teams if you like basketball,
Yes.
but as far as gambling and viewership, probably going to be on the lower ratings end. Sixers make it, which I don't think they will. Maybe they will. I don't know. But if Sixers make it, you could argue they could make a push. But even that's not like as big of a market as like if Brooklyn would have made it.
That's a fair point. Yeah, I agree. I mean, I think if it would have been, I don't know, man. Even if it was like the Nets and the Lakers, let's just say LeBron was still in there. That would have been a much bigger draw, I think. But so you bring up a valid point. It might not be the greatest NBA Finals as far as betting's concerned. So I think that definitely has a lot to do with it.
Would it give you like pause for a company like PENN or DraftKings if you were in it?
I don't think so. I mean, it's not going to be one of those things where it blows a lot of people away, but I don't think it's going to hurt them. Yeah. I would say. Especially as sports gambling is still in its infancy, right? I mean, we still have a ton of states that need to legalize it. So, I still think that it's good for them. Might not be as good as certain other teams playing in the finals, but it's still going to be an important series no matter what.
Yeah, and maybe it's expected. So, would you think that what's more important rather than this total sports betting handle is your position as far as the ranking of how much revenue of that whole pot, what share you're getting?
Yeah.
So if BetMGM is number 2, we saw them outperform Barstool Sports, Barstool Bets, company like that. If they're in 2 position, doesn't matter if the revenue's not as high.
They're all
their
affected.
Share is bigger.
Yeah. Well, so
the share of the pie.
Yeah. So we saw this with Michigan, and Barstool's actually losing market share in Michigan. We heard that news last week, which probably prompted some of the selling. But I would say PENN is better positioned. Market share is huge. I don't want to take away from that, but we saw how DraftKings just cannot stop spending money, and it's stupid money that they're spending. Now, MGM's a different story. I think that they are very well positioned to perhaps be number 1, but we love MGM as well. So I would say that it's definitely not great for PENN, but it doesn't mean that they're not going to continue to grow. And I think that the fact that they have a better balance sheet, they have far less debt, and they're spending less and leveraging the Barstool Stoolies, I think that still better positions them for future growth instead of the right here, right now.
Yeah, I think that, some people are talking about how Barstool just lost their number 1 podcast personality, podcast show, which is Call Her Daddy, lost that to Spotify.
Yeah.
We'll see. I don't know how much that, that's
$60 million, by the way.
I like
that's crazy
that they didn't spend the money.
Yeah.
To be honest.
Right.
I like that as a business move and being the place that cultivates talent, because Barstool's the one that really found.
Bro, that's so true. It's not just Call Her Daddy, right? Spittin' Chicklets and Pardon My Take, all those guys, they cultivated them from the ground up.
Yeah.
And, Call Her Daddy's gone on to move to bigger and better things. And people might not forget this, but Dave Portnoy has said that, like, if people go on to bigger and better things, he's like, I get to say that they were here first.
Yeah.
And that's going to
more people
want to come in. And it's true. And that's what's happened.
So they can I want to say that Barstool paid them like $50,000. The 2 girls that run Call Her Daddy when it first started, they're no longer together. I think it was $50,000 a year each. Now there was sponsorship money and royalties
and whatever they wanted.
But it was pennies as far as what their investment would be. And so you're right. Like, how much more can Call Her Daddy grow? It can grow, but it's not going to grow at the same rate it was before. So you have Spotify spending $60 million and Barstool saying, yeah, we're going to lose some traffic, but like we can invest, you know, like $50,000, how many times to get to 60 million, right? Like if you can get hundreds of podcasts and only one or two of them have to hit.
Yeah.
So just the investment in trying to cultivate, I think that's another smart move as far as grassroots growth.
Rob T brings up a good point, says they still have the Call Her Daddy merch as well. So that's a huge part of their business.
Who has
So
it?
as part of the deal, Barstool has the Call Her Daddy merch.
Oh, really? I
Yeah.
didn't know that.
Yes. Yep.
Oh, that's pretty cool.
Yeah.
I wonder I don't know if you guys have that number, but what revenue merch brings for a podcast like that.
Yeah, I'm not sure. I just know that that's huge for them.
Because really, podcasts are all about the advertising
It
dollars.
is. It is. I will say that remember like over Christmas time, like Dave Portnoy lost his shit when people weren't promoting the merch.
Yeah.
So I would imagine that if he's going that crazy over it, that it's got to be something substantial, I would think.
Yeah. Stuart asked about Clove short percentage. I have 37% as a short interest for Clover.
I've seen numbers over 50, I thought.
Yeah. So I do TD Ameritrade, and I think there's a little bit of a lag on there. I also think you got to take it a grain of salt. I mean, the reality is that short interest is really high. I don't know. I thought it was in the 40s, but somewhere in the 40, 50 range.
I thought it was like 37 before the squeeze, and I would imagine that short interest would grow when it pops like that.
Yeah, potentially. Unless
Just
people are
speculating.
squeezed out.
Yeah.
So depends on if they double down, which I feel like they were. So we'll see what happens. But still one of the top highly shorted stocks.
Yeah.
Short squeeze opportunities. But yeah, and then TD I feel like is always a little bit lower, but we'll see. So yeah, all good stuff going on. My last question to you is this week, is there a particular stock that you feel confident you're going to get into or add to, the position you're already in that you want to add to?
Oh, that's a good question. I thought you were going to go in a completely different direction, and I pulled up the stock that I was going to talk about. But what am I buying this week? Man, I think that definitely looking at the KB Homes and Daniel Camarena came into the Stock Watch Sunday Live. So what's up, my man? And FedEx definitely looks attractive too down at these levels after its pullback.
Yeah.
So I think those two are probably be ones that I would consider getting into, just to kind of see how they react on Monday and maybe even Tuesday. If they continue to come down, bro, I think it almost becomes irresistible at that point. Especially like a FedEx.
Yeah.
FedEx keeps coming down.
Yeah, for sure.
There's every reason to believe they keep going up.
What did you think I was going to ask you?
About just tech, like my favorite tech FANG stock, because we were talking about
Amazon?
Yeah.
Okay.
So Amazon, just real quick, guys, I had this pulled up just to give you perspective here, but Amazon is retesting yet again that $3,500 mark. We've seen this since September. Test 3,500 and get rejected. So watch for Amazon again. We had this on the list last week during Stock Watch Sunday. Talked about it all week, and it's done nothing but go up. But man, if this finally breaks through, this should go parabolic, I think. I mean, at least to 3,700, I would imagine. If it finally has that pressure release, I could see 37 easily.
Okay. Which is essentially a 5% move.
Yeah.
So,
well, I guess that's not parabolic, but that's a huge move from Amazon.
yeah. And remember that what is it, Andy Jassy? Is that his name, Andy Jassy? Andy Jassy? I think it's Andy Jassy.
Jassy, yeah.
Yeah. So the new CEO. So I think it's only a matter of time before things start happening and movement starts happening within the company. When you have a new CEO, typically there's not immediate changes. It's more getting settled in, figuring things out. But at some point, new CEOs know that they have to take action. They have to make moves and provide a direction and vision that's different from their predecessors. So that will happen. It's only a matter of when that happens. And so a company like Amazon just has so many directions it can go.
Yeah.
And the hype will build and the hype will come. So, doing a stock split is just such an easy, obvious thing to do right off the bat. But then leveraging their cash on hand is going to be a huge opportunity for them making acquisitions.
I agree. The M&A this year, I think, is going to be crazy.
Yeah, it will.
Just across the board.
Yeah. I mean, especially if inflation continues to be a concern, I think people are just going to spend, right?
Yep.
And so these companies that have massive cash piles, Apple,
Facebook, bro.
Yeah. So, all right, guys.
I think one of the biggest reasons Facebook hasn't bought anything is because they're afraid to. I mean, with the government breathing down their neck and shit.
Yeah.
Who knows what they could have bought up by now.
Well, there you guys have it. And congratulations to Malta Goya, who's officially a Green Bull. Guys, if you don't know about the Chaos Crew, the Chaos Crew is our community of people that have been along this ride. We have a Discord, which is probably the biggest incentive for joining the Chaos Crew. We have a Discord. You have access to Brad's public portfolio, trade alerts. You get the technical analysis for our watch list. So if you guys are interested, click the join button. For the cost of a coffee, is that what it is?
Yeah,
$4.99.
Less than a Starbucks coffee. Let's put it that way.
$4.99. Click join next to the chat.
That's going to do it for us, guys. Thanks so much for tuning in, allowing us to be a part of your Sunday evening. Happy Father's Day to all the dads out there. And we'll be back here at 3:30 p.m. tomorrow, Eastern Time, to go over what's going on in the market on Monday. That's going to do it for me.
Don't forget to hit that like on the... bye!
Hit that thumbs up.
I bailed.